What's going on, guys, and welcome back to another video. So as requested by quite a few of you that I cover another penny stock today in the form of Senseonics ticker symbol SENS. So for SENS stock we're going to cover three main topics as always. Firstly, we'll have a brief overview of what the company actually does and some of their products. We'll then have a look at some interesting news articles in terms of some catalysts going forward that will impact the price of the NAV. And thirdly, we'll have a look at the price to see is it currently under or overvalued and if I'm going to buy the stock. There's two things to note as well, is that I'm not a financial advisor and you need to do your own due diligence before investing in any stock. And secondly, if you're new around here, it'd be much appreciated if you consider subscribing to the channel, as we're only 20 subs away from our next mini goal of 900. And with all that being said, let's dive right into today's video. So firstly, a very brief overview of who SENS actually are. We can see here they're a medical device startup company that focuses on the design, development and commercialization of glucose monitoring systems. Obviously, because they're mainly got to do with diabetes and other such illnesses, we can see they're in the healthcare sector and their industry is diagnostics and research, and they currently have just under 200 full-time employees. When you go onto their website, the first thing you see is that they are proud to be the only provider of a long-term implantable CGM. A lot of people probably aren't aware what CGM actually means unless you have diabetes or other glucose related problems. So CGM just basically means continuous glucose monitoring. Straight off the bat, you can see that this is one of the company's unique selling points, and we can see that it's the world's only long-term CGM system. With the EverSense 90-day CGM system, you can now actively manage your diabetes simply and with confidence. So we can see also that the EverSense provides continuous blood glucose monitoring for up to 90 days via under the skin sensor. So if you kind of are aware, a lot of the time when you are monitoring your glucose originally, you'd have to kind of prick your finger daily to get your monitor. However, this kind of offers an alternative, which is definitely a lot better for long term, as it gives 90 days coverage. So I don't really want to go into this too much because I want to kind of focus on the catalysts over the last few days. But in summary, this CGM system is used from a sensor to a transmitter, and you can record all of this information in relation to glucose from your mobile app. Also, with their data management system, we can see it kind of has three main benefits. Firstly, historical data is displayed up to 9 reports at any given time. The data syncs with your EverSense mobile app and will display automatically. And thirdly, and probably most importantly, that this accurate data is built up over time, which gives your physician precious adjusted therapy and able to alter any glucose needs. One thing that new investors or even existing investors within this company need to be aware of is that SENS are having their fourth quarter full annual report or earnings report at the start of March. So that's going to there'll be a lot of hype around the company at that stage, both positive or negative. So you can see the volatility of the company around that time, or even over the next week or so, is going to be quite volatile. So you need to take that on board if you are thinking of buying this stock. Again, it's probably worth noting, especially with penny stocks, that these earning reports, even the yearly earning reports, never mind the quarterly report, is huge for the companies and can be detrimental if it doesn't go the way investors want it to. So if for example, if it was like Apple or Facebook, if they did have a bad quarter, the stock price will go down a bit, but however, it always bounces back as they're a blue chip, well diversified company. However, with the penny stocks, it's hit or miss, so it's either all up or nothing. Also, we can see on Nasdaq.com that they're saying, are option traders betting on a big move in SENS stock? Now that can be both positive or negative, but when we actually look through this article, it doesn't really look too good for the company. The article suggests that there's a lot of implied volatility within this company. So options with high levels of implied volatility, as we can see here, suggest that investors in the underlying stock are expecting a big move in one direction or another. The report also focuses on, up here we can see that Zacks currently have this ranked number 5 as a strong sell. So we can also see below at the very bottom here that option traders look for options with high levels of implied volatility to sell at a premium. This is a strategy many seasoned traders, and again a lot of option traders do know their ins and outs of stocks extremely well, and they're not wrong a lot of the time, as these are the big traders. They use this to capture decay. At expiration, they hope for those trades that the underlying stock does not move as much as originally expected. But just like anything, it's very important for companies to be able to get into different markets, and we can see on screen that is positive news for SENS as it closed a 115 million stock offering with their European sale of their diabetics products. After looking at all that, they're currently trading at about $4.57. Over the last month, they're after going up an impressive 63%. They started off the month at about $2.80, and again they're up to about $4.57 at the moment, so that's very impressive gains. It gets even more impressive when you go to the 3-month chart, and you can see 3 months ago they were sitting at 37 cents a share, which gives you up here 1,127% increase, which is absolutely insane. Now, one piece of advice as well that I'm sure you're already aware, with penny stocks, they're extremely volatile, and when you see the legs of over the last 3 months going up over 1,200%, you have to kind of think there's going to be a pullback at some stage, no matter how good the company actually is. And if you look past their fundamentals as well, no kind of stock price can go up 1,200% over 3 months and continually go upwards. So you kind of need to take that on board. All well and good if you got in at, let's say, the $1 or even $2 or $3 marks, so you'll be up quite a lot of money at the moment. However, if it's sitting at $4.50 at the moment, it's kind of, you'd be kind of sitting on the fence in my opinion, because again their overall earnings report at the start of March will have a big say. So you can kind of either bite the bullet before that, and that would be kind of taking a bit of a gamble as such, because if the earnings report isn't great, it's going to completely plummet the price. Again, with penny stocks, they always go up and down like the new times, so you have to take that on board. However, if you look at the flip side as well, if they have positive earnings reports, again, you can kind of, you might even be able to see that before the report itself if you do some due diligence and dive deep into this company. And if it actually does do well, then the share price is only going to go one way, and that's up. There you have it, guys. That's my 2 cents in terms of SENS stock. We had a brief overview of what the company actually does. We had a look at some of their product offerings. We then had a look at some catalysts coming up, in particular some of their earnings reports which will have a big say in the company's future. And we also had a look at their current share price over the last month and 3 months, and we discussed my plans to buy or sell the stock in the coming weeks. So my kind of final verdict again is that I'm currently sitting at the fence at the moment. If the stock goes down a bit, I might start to buy in. But with a lot of penny stocks, timing is kind of the main thing here. So I kind of feel like I've missed the boat in terms of this stock. If I got in at $1 or $2, I'd have been brilliant or delighted. But already when it's up at as highs of $4.50 odd cent at the moment, I do feel like it's kind of, the ship has sailed for me. So I think I'm better off looking for more kind of better or new penny stocks that aren't after increasing so much. Again, it's at going up nearly 1,300% over the last 3 months, which is insane. So for me, I'm not going to buy into the stock at the present time. I might revisit this after the earnings report at the start of March. So if you found this video anyway helpful, interesting or entertaining, it'd be much appreciated if you consider liking the video. And as always, if you're new around here, it would be great if you consider subscribing to the channel. And finally, most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below, and I'll be sure to get back to you as quick as I can. And if you want any companies that you want me to look into as well, in particular penny stocks, just comment below and I'll see what I can do. Thanks very much, guys. Enjoy your weekend, and I will see y'all in the next video.